The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the November 6th, wonderful Wednesday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool, you've heard it before, I call this Accelerate Your Learning Curve. You know, from birth until about the time we are about 18, our learning curve is dramatic. Our capacity to learn, it's staggering. We learn a tremendous amount so fast. We learn language, culture, history, science, mathematics. Heck, we learn just about everything out there. For some people, the accelerated learning process, well, it's continued. But for most of us, it levels off after we get, let's say, our first job. I mean, if there are no more exams to take, if there's no demand to get out a piece of paper, a pencil, why even read any more books? And, of course, we learn some things through experience, sometimes doing it wrong, sometimes doing it right, but we do learn. Now, imagine what would happen, what could happen if we kept up an accelerated learning curve for the rest of our life out there. Can you imagine what we could learn? Look, these are important things to pass on to our kids out there. Just think about the skills that could be developed, the capacities that each of us could have. Here's what I'm asking you to do. Be that unusual person that does keep up his or her learning curve and develop an appetite for always trying to find good ideas. My Lord, here at TFNN, always great ideas. If you go to the homepage of TFNN.com, think of all the great ideas. You got Basil Chapman. He's doing a workshop, a Master Trader workshop. That's this coming Friday. Another great idea. We talked about it yesterday, having people buy you gifts that you actually can use to accelerate your learning curve, like Tiger dollars out there. You know that loved ones are going to ask you, hey, what is it that you'd like for the holidays this year? And you're going to be stumped. You're going to be saying, there's not really much that you need out there. But yet they're obligated. They want to be able to get you something. Have them get you some Tiger dollars, for goodness sakes. I'm asking you to feed your mind just as each of us do our body. Feed it with good ideas, wherever they can be found. Always be on the lookout for a good idea, a business idea, a product idea, a service, an idea about for personal development, folks. Every new idea refines our philosophy. And our philosophy, well, heck, that guides our life. And then our life unfolds with extraordinary outcomes. I say, accelerate your learning curve out there. Let's go check out the curves in these markets. Right now, Dow Futures up 57 points, trading out at 15,607. S&P trading up 8 points at 1764. NASDAQ futures up 13 points at 33.93. King dollar back 15 cents, trading out at $80.60. A little bit of movement in the currency market. We'll take a look at it. Hard currency market. Goldilocks up $9 and change, trading out at 13.17. Silver trading up 25 cents. That's up a little over 1% this morning, trading out at 21.89. Light sweet crude, that's up 55 cents, trading out at 93.92. Our call-in number, 877-927-6648. To give me a call, I would be happy to take a look at your stock chart or anything, help you, assist you with whatever it is that I can. A quick peek around the globe here. Flat market over in the UK. FTSE is up 3 points, so no big deal. We know the FTSE is up against a pretty significant resistance area. Heck, it goes back to 2007, maybe even prior to that as well. So the FTSE trying to catapult its way above its highs out there. The DAX, it's trading up 39 points right now. That's up about 0.4%. Mixed bag over in Asia last night. Nikkei up 111 points, about 0.75%. Hang Seng basically flat, down 2 points. And the Shanghai, that was off 18 points. That's down 0.8%. So Monday, let's see, we came in Monday, I believe we had futures were up. I said not so fast. We came in yesterday, futures were down, or vice versa. I can't recall. Not so fast either way. Well, why not so fast? Well, heck, if we just pull open our 30-minute EKG chart out here and we take a look at this consolidation range, nothing has changed since yesterday. I wish it had. Wish I could report on a whole lot more than a market that's just moving in a sideways consolidation range out there. They're tough to trade. You can trade them. You certainly want to be taking a look at the top of the consolidation range for places where you would go short, the bottom of the consolidation range for places where you would go long, and you just simply have to have a relatively tight stop out there. It does require you to be paying attention to the marketplace. Now, this is an intraday time frame that we're looking at, but really it works the same way on daily charts and works on and weekly chart. It works the same way on anything that you might trade out there. So when we were taking a look at the market moving down yesterday, and we're just simply going back to the time frame of 10:30. I'm on from 9 to 11 out here. As the market moved down into the 10:30, 11 o'clock, 10:30 time frame, what we saw was going from a swing point low. That was the swing point that came in at 12:30 in the afternoon, November the 1st. Down at a price of $17.47, made a move up to the .618 retracement level. That happened at about 2:30 in the morning. That was on November the 5th out there. That was yesterday morning. So from that low to the high, the exact .786 retracement, well, that was 17.50.64. We actually saw price get down into a level of 17.50.50. We know that it was in the extreme oversold territory. That meant that it had to bounce. As I said, if we see a close above the 10 o'clock bar, that was an important bar to be paying attention to. That level was 17.57.25. That then we would see a more significant bounce. If we didn't see a close above that, that was saying, okay, we're going to go down and test the 17.47. You can see as soon as we closed above that, not we, but the S&P futures, and it did it with a nice wide-ranging bar just as we were coming into that close on 11 o'clock. Well, that set up a move. In fact, it set up an A to B equals CD pattern, I believe. Let's go take a look at that A to B equals CD pattern. Your 8-point now being the low at 10:30 a.m., 17.50 out there. Our B point being the bar that came in at 12:30. That high 17.62 and a quarter. Pulling back right here to the C point that took place at 6:30 last night. 17.55.75. Projection of a 1-to-1 A to B equals CD. Well, you'll love this, folks. 17.67.50. I must say at 12 midnight during that time period, the high was 17.67.50. How does that work? Just the pulse of the markets. And, of course, what we saw here was as that level was hit, the ES Mini on the 30-minute chart, it was moving into overbought status out there. Now what, in order to work that condition off, really just kind of worked its way sideways. We saw it hit that level again here at about 6:30 this morning. Now, if we take a look at coming from the high out here, the top of the consolidation range, that's really going to be up at the high here at 6 a.m. That was on October 30th. That was at a level of 17.73 and a quarter. If you go from that high down to the bottom, you'll see that A to B equals CD. Well, that set up a Gartley sell pattern. Because set up a Gartley sell pattern, that was the .786 retracement. So we've hit the .786 retracement on the downside, the .786 retracement inside this consolidation on the upside. Where will this market head to? Well, I tell you what, folks. I don't really know, and you don't need to know either. All we need to know is this. We've got this consolidation box marked off real well. And whichever way the market breaks, whether it's today, whether it's tomorrow, whenever it is, what we will see, what we should see, is likely a move of 25 points or more, because that is the consolidation pattern. That's in the ES Mini. All you really have to do is sit around and wait, and wait, be patient. Don't try to stick your money and make it work in the middle of a consolidation. That will just simply spell all kinds of emotional trouble for you. No reason to do that. You've got a great consolidation pattern. We can take a look at these patterns over and over again. Do they all work? Do they all extend to at least equal to or greater than the consolidation? Absolutely not. But most of them do. Most of them do, and that's the trading pattern that's out there. That's the one that you should be waiting for. Let it break one way or another because it's a nice 25-point move out there. Let's go to our first caller. Let's go to Rob in Orlando. Rob, thanks for calling. Thanks for holding. How are you this morning?
Morning, Steve. I'm doing good.
Oh, excellent. You want to take a look at Allied Nevada, I believe. Is that ANV? Is that correct?
That is correct. I have a
Tell me what you're doing, how I can help you.
I'm going long. I have a stop on it on $3.41, but I'm not sure if it's going to retrace more or not. But it had good earnings. So
you're not in the position here right now. Is that correct?
Yes, I am.
Oh, you are? Okay. So
Yeah.
you're already long Allied Nevada here, and they came out with earnings today. Let's see. It's give me a moment here. Did they come out with earnings today? Was it today they came out with earnings this morning?
Yesterday,
okay. So they're trading up about 5% here this morning. So they're trading out at 422. So you're going to get a nice little bounce. And, it had a nice little sign of strength out here. So you've got your stop, you said, at 340?
341.
And where's your exit?
That is the guidance I need.
So I would put my exit, let's see, right here. The top is 496. It's trading right now at 422. If you can hold on through the break route, we'll come back, and I'll tell you what it is that I'm looking at, give you a couple of areas here for you to put your exit strategy together and take some profits off the table, and that's on Allied Nevada, ANV, 877-927-6648. Be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We're going to go back out to Orlando to Rob. We're taking a look at Allied Nevada. ANV is the ticker symbol. Rob's got a nice bonus here this morning. It's going to gap up on some nice earnings out here. Now, Rob, what I did during the break, and I want to Rob dropped. Oh, okay. Well, hopefully Rob is listening in on this here. I'm going to give you what we're going to take a look at: a daily, weekly, and a monthly chart out here. So you're in the position, and what I'm looking for is some resistance areas with inside Allied Nevada. So, folks, if you're watching us on TigerTV, if you listen to us on the radio, your mobile device, thanks so much for doing that. And you can always catch the archive of this show on Channel 9. Of course, you can get this streaming live to you by going to the homepage of TFNN.com. The upper right-hand side, you'll see a button, 3 little smartphones on it. Click on that. The show will stream live. And what you'll see here is you'll see this big downdraft from August the 6th. And the top of that, there's got a nice little open window, a gap up there, the top of which is $5.51. That's what the daily chart you can see here. Even with the nice sign of strength that Allied Nevada had on October the 7th, that was the last time we saw any kind of sign of strength inside this equity, fizzled out the very next trading session. So it has not made it up to the level of 551. If it does get up there, that should be a pretty significant resistance area out here. So the daily says probably more like 496, which is the top of the October 7th session. 496, it had made a little bit higher high on October 8th. Maybe that's 509, but it does not look like you would get more than 551 out of it. That's what the daily chart is showing us here. And what I would do is if you're in this trade, and, I didn't get a chance, and I would have asked Rob if he was on the line, when he got into the trade, was this a short-term, long-term? What's the type of time frame of a trade that he's in? Because that makes it a little bit easier to be able to provide you with. I'd like to stay in the same time frame out here. So not knowing that, let's go take a look at what the weekly chart here shows us on Allied Nevada. And the weekly chart shows us that it is traveling within its most recent swing point low. That was in August of 2013. The low of which is 366. The high is 617. So it's 617. It's still within inside that swing point. That is likely, you can see here, ever since that time frame, it's been trading really inside the center to the bottom of that swing point. So this has significant resistance, most likely at 617. As long as it's inside the swing point, the bottom, which is 366. The 366 has not been tagged here just yet. As long as you're inside a swing point, and even today's action, if it cannot clear, not today necessarily, but let's say this week, if it cannot clear the high from August 9th, well, if you can't clear the top of it, you might want to go down and test the bottom of it. So be careful here on Allied Nevada. We're not seeing any wide price spread or accelerated volume off of the bottom on a weekly chart, and that says caution, Will Robinson. Now, if we take a look here at the monthly chart, the monthly chart shows us that it is already still trading back inside the October 2008 time frame. The high there is 577. So you've got a 577 number on the monthly. That says that that's likely a resistance here, and now it has not tested the bottom. The bottom here in Allied Nevada on that swing point, it happens to be $1.56 out here. So that's why you've got to be very careful on this equity. And if we take a look at the monthly candles out here, you can see there's not a bullish candle. You haven't seen a bullish candle inside Allied Nevada, that's for sure, as this thing came off of its recent high back in October of 2012. So there's nothing bullish about this monthly chart that we are looking at inside of Allied Nevada, and still traveling with inside that swing point that takes you back to October of 2008. So Allied Nevada here has a 23-cent average true range. That's over the last 10 days. Its average movement over the last 10 days has been 23 cents. So, Rob, what you can do if you want to set some kind of trailing stop is let this thing open Wherever that high is, use 23 cents or some derivative of that. By derivative, I mean maybe take 23 cents times 1.272. That's a Fibonacci expansion number, or 1.618, and use that as a trailing stop and have that trail whatever the high is intraday. If that's and when you take a look at that price point, you'll be able to make a value judgment with regard to what's left to likely get out of this equity from a profit standpoint versus the risk to the downside. So always do your reward to risk. Looks like you're going to be off to a nice little gain here this morning, but Allied Nevada does have resistance. And, folks, you can use that same set of thought process tools to take a look at where something is traveling within, and most certainly utilizing a trailing stop, let the market take you out, is another nice outcome. But always take a look at what's left as likely the resistance area versus what you would be taking a look at as the downside opportunity out there. Figure out your reward to risk. That is how you trade. That's how you make your decisions. But, of course, always go back to when you entered the trade, what was the time frame and the reasons why. Of course, on a longer-term time frame, on a monthly, on a weekly, I just don't see it here in ANV. 877-927-6648. We get back, we're going to go see how these markets are going to pop, whether or not they're going to drop. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. It's that time of year again, and our semi-annual Tiger Dollar sale is back. For a limited time only, you can get a 25% bonus on any Tiger Dollar purchase, and included in your purchase, you'll gain access to an exclusive 4-hour live trading event with Tom O'Brien on November 19th called Strategies for Trading July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 55 points, trading out at 15,671. S&P up 5 at 1768. Composite up nearly 8 points, trading out at 39.47 and change. Russell 2000 trading at 1109. That's up about 0.5%, up $5.70. Lead the charge to the upside. Open Table up about $8. That's up 11% right now. Ralph Lauren, they're up $8. That's up 4.5%. Imperva. Yeah, IMPV is the ticker symbol. They're up about 20% here this morning. Looks like they posted a Q3 loss of 15 cents a share versus 8 cents a share. They must have some pretty darn good guidance out there. You've got the Zillow. That's up $4 and change. Blue Cora. BCOR, don't know if I butchered that one. That's up about 15% here. They're out with numbers, $124 million versus $92 million from its third quarter. Net loss of $6.5 million versus $2.4 million out there. Oh, my goodness, they must be forecast. They're doing a good job of spending. That is for sure. You've got web.com, www. That's up 13% this morning. Let's see if they're out with numbers as well. Looks like they are. Only I don't show. Only thing I show is a third quarter loss of 12 cents a share versus 45 cents a share from the year earlier. To the downside, Tesla Motors, that's in the lead here, off $17, nearly 10% this morning. Mercado Libre down $12 here this morning, trading out at $122.99. Verisk Analytics, VRSK, down 10%. Tournier, TRNX, that's down 22% this morning. C-Trip Ecom, CTRP, they're tripping. They're down about 6% here. NPS Pharmaceuticals, maybe they're tripping as well. They're down about 11% this morning. DaVita Healthcare, DVA, off about 4.5%. Our call number 877-927-6648. I had a question in the den to take a look at the 30-year Treasury yield index out here. I've got the monthly or the weekly chart up on my screen here first. So on the weekly chart, we can see an A to B equals CD pattern here that has formed. So let's go check that out. That A point here coming off of the lows. This is the low. Nice big bullish engulfing candle. Key reversal weak. Okay, those are important. That was July 27th as it was making its low down at the 245 level. So that is your A point of an A to B equals CD up. Now I'm going to take a look at the larger A to B equals CD up. I'm going to go from that low to this high out here that took place on March 8th, 2013. Again, it's a weekly chart right now that we're looking at. That came in at 328. Makes a retracement. What kind of retracement does it make? Looks like probably about a 0.382 retracement, maybe. Nope, pretty close to 0.618 retracement. 277 would have been the number. Got down to a low of 281 out there. Now what we can see here, the 1 to 1.272, that level was hit out here with a wide-ranging bar. That's from the trading session of August 16th. We can see here that price primarily trading with inside of that bar out here. So looks like the 30-year Treasury yield says it actually wants higher price. Take a look at this C to D leg move here. Price traveling on the inside. That means the left-hand side of the C to D angle out there. That's telling you strength. That's telling you actually significant strength out here. In fact, getting a close here this week above this candle, October 25th, that actually, if you were buying, if you could buy this, that would be a buy point out there as far as I am concerned. As far as resistance, well, the resistance inside here, remember, folks, doji candles, in my opinion, they've got a ton of meeting at resistance areas. In this case here, in order for that fruition to come true, in order to see 415 on this, you're going to need to see a close above, because the only resistance that I can see other than the very left-hand side of the chart, other than the waterfall cascade out here, all that I see here, the resistance is that doji candle out here. So resistance is September the 13th, the week of September the 13th. You see a close above 3.91 on a weekly basis, and 415 is in the cards. That's the weekly chart, which gives us a really good intermediate term, long-term trend that is out there. If I switch over and take a look at a daily chart on this, see if the daily chart shows us any other bumps in the road out here. Nice big move here off of these lows back here in May for sure. And on the daily chart, looks like it just finished maybe an A to B equals CD down pattern. Looks like which is nice, because this actually would be a Gartley buy pattern. If we take a look at, let's see if it was an A to B equals CD down. Well, you've got a couple of them that you could track here. Let's look at the larger one, which is just simply coming off of September 11th down to the low on September the 25th, and then back up here. That one didn't completely complete. Boy, how's that for a grammar out here? But if you take a look at Gartley's book, if you read his book out there, what the Gartley is all about is trying to find a pattern that allows you to get into a move that you might have missed. In this case here, if you take a look at the move off of the May lows, May 1st, 2013, all the way up to the high that was established on August 22nd, never did it really give you any pattern, any kind of pattern on the way down in order to get in essence, to get in on a move like this, whatever it is that you would be playing, whatever ETF, however it is that you would be playing the 30-year Treasury yields out here. What Gartley said was to buy, especially in a bull market, buy the first, now I'd have to pull this back here, but in essence, buy the first A to B equals CD down. He didn't talk about Fibonacci numbers out here, and so you can see very close. Let's see if there's another A to B. Let's take a look at this move out here. Let's see, here is the first A to B equals CD down, it looks like, inside the Treasury yield. That would be coming off of September 14, 2012, down to the low on September 28th, and then the bounce up here. Yeah, so there's your first A to B equals CD down, and in the C point being October 18th. Now, 268 was the number. We saw it actually get down to, on November 16th, got down to a low of 269 out there. That's pretty darn close for government work, and we don't even do government work around here, so that's pretty close for our work. That was the first A to B equals CD down out there. Now you're, and I don't even know. Let's take a look and see what kind of retracement it was, but if you're really looking at the Gartley patterns, it doesn't have to be a 0.618 or a 0.786. We just like that because we understand the normal harmonics of any kind of move on any kind of a pullback out here. And you can see in this case here, it actually did set up a 0.618 Gartley buy. I'll go ahead and I'll color that in. That way you can see the colored version on my chart. We'll go ahead and get rid of these two things here. Here's what that Gartley pattern ended up looking like out here. There it is. There's your 0.618 Gartley pattern. And then what you had was you had a gap up. That trading session on November the 19th, that is actually a bullish pattern out there. That is on the 30-year Treasury yield. So I hope that helps. Who asked me inside the den? Jay Pritor out there. I hope that helps you in taking a look at the 30-year Treasury yield. Now, the first caller, which was Rob. He was in a gold trade, ANV, Allied, Nevada. Let's actually go take a look at Goldilocks. Heard from K. Rico yesterday. It was nice to hear from K. Rico, and K. Rico was sharing with me his thoughts on gold, and so it required me to actually pull up my longer-term charts out here. Here's a daily chart on gold, but I'm going to go ahead and let's take a look at a longer-term chart. Let me see if I've got a monthly somewhere out here. It looks like I somehow must have deleted that. Can't believe I would have done that. Let me see if I just switch over to the monthly, if it saved all that data. There we go. So let's take a look at a monthly chart for Goldilocks, see what's going on out here. Man, looks like I've got a bad tick here, that's for sure. Yeah, you hate that, especially if I'm going to do this thing live on the show. I don't think gold went from 12 51 to 1361 last week. Did it do that? Well, let's forget about last week's candle formation. Here's what's most important to be paying attention to, in my opinion, when we take a look at a longer-term chart. We talk a lot about either horizontal trading ranges, what we've referred to as consolidations. We also take a look at diagonal trend lines, or we take a look at price channels out here. In this case here, we're really looking at price channels for gold. And just like we took a look at the 30-year Treasury yield, and we were taking a look at a weekly chart, because weekly chart's going to give you a dominant trend out there, much better than a daily or an intraday chart out here. And your trend, the trend is your friend for sure. Now, if we take a look at the trend here inside of Goldilocks, which has given us some nice moves off of the lows out here. But what it hasn't done, gold has not broken out by any stretch of the imagination, as long as your imagination is taking a look at channel lines inside of the contract. Now, this is the continuous contract out here, and if we take a look at the top side of the continuous contract, meaning the top red line, the diagonal line, that's really represents our price channel along the highs out here. And what we can see is each time that gold has gotten up there, it got a little bit above that area, was trying to break out maybe back in February of 2013, but we can see that level really held as a resistance area. Try it again. Goldilocks tried again back in March of 2013. Couldn't break it out. Busted all the way down to the bottom, which is really what set up the bottom of this descending price channel out here. So I think that is a pretty good low. I think that's a pretty good line for our bottom of our descending price channel out here. So we have seen a full channel correction out here. That's what took place coming off of the lows here in June of 2013, all the way to the high that were placed out here. That took place the week of August 28th. But you can see that area here has acted as resistance. So gold has offered a few nice trades out here. Certainly my clients and I have been in some nice trades out here. I know Tom has been in a number of nice trades as well. When I take a look at the longer-term picture, we'll know if gold is really breaking out. And how will we know that? Just simply go to your chart. Look, maybe if you don't have this tool here that I use in Ensign, you've got at least a line tool. And on the line tool here for your channels, what you want to do is you want to identify the areas where you've got the largest number of co-located opens and closes. That means it doesn't matter whether it's an open or a close. We just use the body of the candle, because the body of the candle is the essence of price. The wicks, the shadows, they're nothing more than extreme emotions. You really want to be paying attention to the bodies out there, and that's how you identify your channel line. So in the case of gold, on the longer-term basis out here, it has not given us anything other than just simply corrections inside this descending price channel that it has been traveling. And now that is on the daily chart. The monthly chart out there. If we take a look at the weekly chart here inside gold, that red line here is the I don't know what it is. Let's go find out. Which moving average it is. I don't want to get, but it's probably the 200-day. That would mean the 40-week moving average, since we have a weekly chart. But let's just make sure. I don't want to give you it says the red line is the 40-week moving average. Okay. It's probably right in front of me. It's right there. It is right there in front of me. And so those of you that are wearing your glasses, you were saying, hey, Steve, you said it's the red line is 40-week moving average, 200 days. So you can see here, gold right now is under the weekly 200-day exponential moving average. That would mean on the daily it likely is as well. So that is bearish, not bullish out here. And you can see on this chart here, we can see when really broke the trend line. That was the trend line, and it broke it back in May. This is coming off of the lows. Well, let me take this back a little bit further. This is coming off the lows here back in 2008. And that trend line held, and it finally was broken right back here. The trading session, the trading week of May 8th, 2012. Now, when you break a trend line, a channel line, prices are going to oftentimes try to get back inside there. That's exactly what it did. It did get back inside there back in September of 2012, got back below that level in October of 2012, and that was it. That set up the A to B equals CD down and other bearish patterns out here. So the monthly chart is giving us a great area to be able to identify whether or not gold really ever does break out again. And it will. I suppose that it will. I don't know if it will or it won't, but we do know where the line of resistance is, and that makes it easy to understand from a shorter term, longer term, whatever the time frame is that you're trading, to understand what it is that you are up against if you were trading gold. In the case of silver out here, we take a look at silver, silver's got this two beautiful patterns. It completed the first, well, it completed both patterns, really. These are two 1.61. Well, these are two, well, one was a butterfly. That's the yellow pattern that you're looking at on my screen. That was a butterfly pattern, a 1.618 butterfly, and it had the 0.786 Gartley buy pattern. And that has held so far. But if you really take a look at the moves off of those patterns, they're really dismal out here. We take a look at the smaller pattern out there. The smaller pattern is this butterfly, and if we go from its A point down to its D point out here, that is on June 28th, what you will see is all that silver has done, all that high-ho silver has done, and that red line, let's see here, that red line is the 200-day moving average on a weekly chart. It's a 40 period here, just to keep things consistent, right? 5 trading sessions in a week, 5 times 40 gives you the 200 on a weekly. All that silver has done is made the dead cat bounce. That was a 0.382 retracement, 24.78. We actually saw silver get up to 25.12 out there and then move lower. It hit that 40 period exponential moving average that's acted as resistance here. So not much of a move here in silver either. So that's on gold and silver. That ought to help out on ANV. In fact, let's just go check in on ANV, see what that is trading at right now. We know that had gapped up a bit. Oh, and it has sold off since that time frame out here. So ANV out with some nice earnings out there. But this equity here, as we take a look at it, as we did take a look at it on the weekly, on the monthly, it's got some troubles. Well, it's got troubles on the daily. It hasn't been able to get up to that high, that big downdraft, that big supply line from August the 6th. Right now, we've got the Dow is up 94 points. S&P is up 9. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book, Introducing the Chapman Wave Methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. The Dow up 103 right now, trading out at 15,721. S&P is up 10 full points, trading out at 1772. So let's go check in on our consolidation patterns out here. We're going to take a look at the 30-minute contracts for the futures. We talked about the ES Mini here earlier this morning. Now we're going to take a look at all of them. If we take a look at the Dow specifically here, the Dow ES Mini, we can see that so far it's hit a high of 15,675. 15,675 takes it right to the top, which was 15,676. That was at 6 a.m. on October 30th out here. So we want to be paying attention to the Dow. This little consolidation here, the Dow on the larger term basis, the Dow on the larger term basis has got a 1,000-point consolidation. Here, this just happens to be a 200-point consolidation out here. We can see here on the 30-minute chart that price has gotten into the overbought condition out here. So the key is going to be what happens when that overbought condition begins to work itself off. Is it just a small pullback? Is it a larger pullback out here? This is nothing that you would chase at these levels, knowing the EKG, the ECG, the electrocardiogram of the markets out here, utilizing that 14-period relative strength index. So we're getting up to a level that has been resistance. Now, this is just on the 30-minute chart out here. If we go back a lot further, in fact, if we go take a look at the actual Dow Cash Index out here, let's do that. Real quickly, you can see it's really up towards the last time that it hit its high back here on October 30th. There's that 1,000-point box out here. Of course, any break to the upside inside the Dow, that sets up 15.7 to about 16.7 out there. But one thing at a time, we'll just simply take a look at the intraday chart, get some type of signal out there as we switch back to the 30-minute charts out here. So we know the Dow testing an area of potential resistance, being the consolidation zone that is out here. Now let's go take a look at, what has been really the strength inside the market. Let's take a look at the NQ, NASDAQ futures. NASDAQ futures haven't been able to make it up to the top of their consolidation box. That's a 40-point, it's a 38-point to be exact consolidation, the top of which is 10 a.m. on October 30th. That level is 34.0175. Look, folks, if there's going to be a breakout, we'll see it occur, in essence, in tandem. They don't have to all occur at the exact same time, but we'll see breakouts out of these boxes all at the all near the same time period out here. And if we take a look at the ES Mini, we just simply come back to that. You can see that's got a bit of a ways to go before that breaks out. That's got to get up to a level right around that 1773 and a quarter range. Right now it's at 1769. We can also see it too getting towards the overbought status of the 30-minute chart out there. If we take a look, let me go look over inside the New York Stock Exchange to see what's going on there. The key number here today is going to be net advancing issues. Of course, this has been nothing more than a jostling back and forth Net advancing issues right now, 1260. They need 1155 at the close of the day in order for the oscillators to get above zero. What do I mean by that? Well, if we just simply take a look at the actual New York Stock Exchange, I like taking a look at the summation index, which is, and the price and volume oscillators out there right now. They are below zero. We have to wait till the end of the trading session in order to see how this thing pans out. But it's been moving back and forth. You can see here above the zero line if you're watching us on Tiger TV. Good old tug of war going on. Of course, the consolidation patterns, they're the ones that are showing us that as well. So that's what we want to be paying attention to today, those consolidation patterns. If we take a quick peek in on the VIX right now, that is trading where it's down about 24 cents out at 1303. Folks, if you're off to start your Wednesday, have a wonderful Wednesday. Otherwise, I look forward to seeing you in just a few or tomorrow morning. Take care, folks. Have a great day. What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.